Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online video series. We want to get an update because of the good news with Alex Langer, the CEO of Sierra Madre Gold and Silver. Good morning to Canada. How are you, Alex?
I'm doing really well, Jochen. How are you doing?
I can imagine that I'm doing also well because you guys really delivered, and I'm a shareholder of your company. I want to disclose that upfront. First of all, congratulations. You started with the test mining, and yeah, it looks like things are going really well. So, what's up?
Yeah. Thank you so much, Jochen. So it's been pretty exciting. We did move a little bit quicker than we had planned, which is great. The mine and mill and everything like that were in such good shape that the amount of time it took for us to get it operational was really quite quick. So as of June 25th, which is well over a month ago, the mine has been running at 24 hours consistently, which is amazing.
Wow.
Now we're still doing test mining, test processing, so obviously a lower througut, but we're at 260 tons per day on average, which is more than half the capacity. So things are really progressing well. Obviously little bugs and hiccups, things like that, but nothing that's really prohibited much. So it's gone really well. And it's a testament to the quality of the people that we have there. We have a full staff, over 180 people working, and that'll be ramping up even further. And just the history that our technical team obviously has with Lagatar, with Greg and Luis and Francisco, which has been great.
Okay, super. I mean, I like that. That's fantastic. I think you also have an offtake agreement with MRI, and it looks like, because you just released some hours ago, you released your first concentrate shipment. So it goes fast because concentrate means money.
You got it. Yeah. So cash flows are coming, which is really quite exciting. So generally what you do is you want to stockpile enough material so that if there's any hiccups, again, you're always having a consistent flow of cash flows, which is really keen. So at the bottom of that press release, we did kind of announce that moving forward on a weekly basis, we will always have a concentrate shipment at least weekly, which is huge, which means we're having cash flows all the way through the year, and that we do have, or we're expecting now, with this amount of cash flow coming in, that we'll be able to increase our production without needing any further capital, which is always good for shareholders, towards our stated goal of commercial production, which is now at the end of this year, 2024, as opposed to 2025. So we've really accelerated timelines, which is great. Silver price has really worked in our favor recently, which is huge. So we are able to get that extra revenue in from the higher gold and silver price, which is great.
Yeah, fantastic. And this is what you have now produced, as you said it, with the 200 approximately 60 tons per day. So I read in the press release you had 90.7 dry metric tons shipped, with approximately 3,000 grams of silver and 30 grams gold per dry metric ton. So that is approximately 27 kilograms of silver, and it is approximately 2.7 kilograms of gold. That is, what is it, like $400,000, something like that?
If you do the rough mathematics on it, sure, there's right around that number. It's a bit more, but you also have to take in your treatment charges and transportation charges and all that. But no, it'll be a good number for the company, and which is great, which is a huge step towards our goal of 500 tons per day.
Yeah, absolutely. And do you think that would improve when you go to the 500 tons, let's say fully commercial production, everything up and running, let's say also optimized? Is there room for improvement that we can say, I mean, if we would scale it up, we would double it, maybe there comes more out?
For sure. So that's really part of it. So understanding the grade controls and things like that. So we're really focused on profitability. It is a smaller mine. Throughput is important to us, but it's honestly profitability. So we really want to make sure that our cost per ounce is as low as possible. And when you're able to do that, then the ounces will come. And from there, at 500 tons per day, we have stated that we do want to double capacity, kind of 2 to 3 years from there. And we'll do that in stages again, just like we're doing now. We're starting at 260 tons per day. We want to increase that towards 500, and then we move up to 750 and then 2,000 tons per day, which is a good number for this mine. I think we could probably get it beyond that as well, but that would be a big goal, and that's a huge catalyst in a couple of years.
Absolutely. Let's talk a little bit about costs. I know it's maybe a bit too early, but we know historically, I think it was like $13 to $15 per ounce silver equivalent, as far as I'm correct. Would you say that is also today achievable? Because we have inflation on the one hand, but on the other hand, maybe some costs have decreased, some have gone up. Would you say that you could produce below $15? I know forward-looking statement for the
Yeah.
regulator, sorry for that, but we are talking hypothetically and with the experience of the past, with your results of today. So just make a little bit of a guess.
Sure. No, yeah, historically, you're right. It was right around 13, 14 all-in sustaining costs. So that's a big number, that all-in number. A lot of people will, give their costs, but don't include capital overheads and things like that, which obviously is important. We're here to make money, which is number one. So we want to look at all-in
Sure.
sustaining costs. So historically, you're right, around 13 to 14. Obviously, today's costs have gone up, but they're not as high as you'd expect. In terms
Mm-hmm.
of labor costs, we know our labor costs inside and out. That's per hour, per man hour. We understand what that looks like. And to give you an idea, we're paying 6% more than what they were doing in 2018 when this mine was last in production. Energy costs, that's diesel and fuel and things like that, are actually less. Mexico does
Mm-hmm.
subsidize that, which is good. So we have lower costs there. Reagent costs, some of the chemicals we use from the flotation have gone up. So it kind of evens out. So I think longer term, to try to hit those goals is realistic. Probably not at this stage at 260 tons per day, but by the end of the year, if we're at 500 tons per day as our stated goal, then I think those numbers should be somewhat realistic. Again,
Mm-hmm.
inflation could be a little bit higher, but somewhere
Okay,
in there.
super. Okay, let's speak a little bit about mine life. What do you have resources today? What mine life would it be? Let's do it with a 500 tons per day
Yeah.
calculation. Yeah, and what are your plans for the next years to really let's say move that forward?
So this is where things get a little bit tricky. We do not have a PEA. So again, I do
Yeah.
advise everyone to look at our website, look at our press release, and we have moved forward, or we are moving forward with production without a PEA, without a feasibility study, which is pretty rare. Usually you would have
Mm-hmm.
to, do a resource report, then a bigger resource, then a PEA, then a feasibility, definitive feasibility, bankable feasibility. So we've kind of skipped a couple of years and probably saved tens of millions of dollars, to be honest.
Mm-hmm.
Reason being is the mine was formerly in production. We have all the historic records, so we're relying a lot on that information of the former employees of the mine, former operators of the mine, which a lot of our technical team, and that historic data to make the decision to push forward. So what we have done is we have now completed an 8-year internal mine plan. So
Mm-hmm.
it hasn't been verified by any other group. It's all been done
Mm-hmm.
internal, but it gives us a really good understanding of where we're going to be in production, because that's really important. Once you start, you never want to stop, and we always want to be increasing. So that 8-year mine plan does have us going from, the 260 now up to 500 by the end of the year, and up to 1,000 a few years after that. So
Mm-hmm.
we have a really good understanding, a really good grasp of where we're at. If we look at the historic resource, the updated resource that we did, just under a year ago, end of October last year, that had
Mm-hmm.
about 27 million ounces of silver equivalent, plus another 20 in M&I. So it kind of gives us a good idea. So if you want to work backwards, the mine historically was producing 1.5 million ounces of silver a year at 500 tons per day. So if we bump that up to 1,000, there's still a really, really long lead time there of potential ounces. Again, we'd have to prove that out, and we'll be able to talk about those numbers in terms of mine life and goals, all the sustaining costs once we'd be in production about a year.
Mm-hmm.
You market, the regulators want to see that, which I think makes a
Mm-hmm.
lot of sense. Let us, put some numbers behind what we're doing, and then moving
Yeah.
forward, you're allowed to state, yes, we have some reserves. This is what they look like, but you need a year of production before you're able to do that.
Yeah, which I think is really fair because
So
everybody can
100%.
tell a story. That's that's
Exactly.
for sure. We
Yeah.
both know that well.
Yeah. So we are
But
looking as well at the
yeah,
possibility of doing a PEA, if that makes sense. We're really just focused right now on achieving some of those goals internally, and fine tuning the operations from the test mining, things like that. So everything goes
Mhm.
well and we're able to move forward, then we could look at perhaps doing a PEA, and then from there we'd be able to have some better numbers that we could talk to the market about.
Yeah. Okay.
So for the
Super.
time
So
being,
what?
we have to be cautious for sure.
Absolutely. So what could you imagine? Let's say, as you are now underground and you start the mining, of course. So drilling from the underground is much easier and cheaper than, of course, from the surface. So would you do also some drilling until Christmas? Could you
No, I
imagine
don't
that?
think so. At this
Okay.
point, no. So,
Yeah.
to be fair, one of the reasons we acquired Lagatara is for the exploration potential. We feel it is massive. There's over, what is it, 15 kilometers by 4 kilometers of strike length. We've now identified close to 60 kilometers of strike length material at surface, which is
Okay.
incredible. So, we truly
Yeah.
feel it is one of the largest undeveloped silver districts in Mexico. So, we definitely want to use cash to go explore the rest of that project. But,
Mhm.
capital is really tough right now in this market. And so we did make a cautious decision as a team to put forward with possible production and commercial production, and then that would generate cash flows to go explore the rest of the property. So if things go well, and we hope
Yeah.
so, then we would generate some free cash flow and then use those cash flows to go
Yeah.
explore the rest of the property.
Super. So that would mean with the mining, let's hope for the 500 tons per year end, that you would be self-financing. You do not have to go back to the market.
If all goes well, correct, yeah, and that's the plan internally.
Yeah. With what numbers have you calculated internally your production? I mean, what have you taken for silver for the gold price?
Yeah, internally, again, when we acquired this mine, when we did the due diligence, silver was $18. So at these prices, we are absolutely thrilled. So internally, we use a silver number of around 22 and gold at about 2100. So anything above those numbers, we are very, very, very happy with. And yeah, so far so
Super.
good. Yeah, that's one thing
Perfect.
we
So,
can't control is the price of silver and gold. Not Goldman Sachs, but maybe one day.
yeah. Super. Alex, that was a great final word. I love that. That's exactly what it is. So I would suggest you keep the good work running. And I think we talk definitely in that second half here again when you have some more numbers for us. And let's hope that everything goes the way yeah, you want it and we want it as shareholders, of course. I mean, gold and silver prices look fantastic. I have the feeling that we will go much, much higher this year, especially the next years. And so from that point, we are very positive for your company. Thanks, Alex, and I wish you all the best.
Thank you, Johan. Appreciate it.
Thank you. Yeah, ladies and gentlemen, that was Alex Langer, the CEO of Sierra Madre Gold and Silver, the latest, silver gold producer here out of Mexico. And you heard it, the test mining has started now. It's over 4 weeks. And they just shipped the first concentrate, which is fantastic. So they are fulfilling offtake agreements. They are making money from now onwards, and that is fantastic. And they are now self-financed. This is also important with the whole mine with the future exploration coming from next year onwards. And I think it's a great company. I'm a shareholder, and to be honest, our point and figure chart shows us the first the first price target is $1 Canadian to 120. So a beautiful upside from today. And when Alex delivers the 500 tons per day by Christmas as a nice present for me and all our shareholders, that would be also fantastic, because that means a lot of money would be made next year. So that looks all good. Stock price looks cheap. It is too cheap, definitely. Make sure you get some. Thanks for watching us, and bye-bye from Austria today.